Jim. Welcome
Hello,
back.
Coach.
Hey, buddy. You know, I was talking about, that we kept making higher lows in the VIX with successive new record highs in the S&Ps for months now, right? What did you see coming? Because, I saw a few of your tweets, and I think that your Vixometer was giving warning signals before the breakdown.
Yes, and yes,
Okay.
and it wasn't the only thing. So,
Okay.
um, can you see my
Have the PowerPoint up there.
awesome? Okay, so I decided that this morning's Substack post at Vixology would be titled "Help Me, Obi-Wan,"
Yeah.
and we know that Obi-Wan is Jensen Huang from NVIDIA. Um,
Okay.
because it just feels like we're kind of teetering on the edge, waiting to figure out which direction he's going to send us.
Yeah.
Um,
We
and
are.
Yeah, it's this is a binary event from my perspective. There's been a lot of buildup. There's a lot of tension in the market. Uh, Quite a few things have turned bearish. So let me get to it.
Okay.
Disclaimer, disclaimer, disclaimer. Nothing I say means anything. I'm here to entertain you, and nothing is a recommendation to do anything. That's
Hey, Jim, when it comes to disclaimers and, you've, covered your regulatory obligations, but, I think they have these disclaimers backwards. I think past performance is more indicative of future results than not indicative of future results.
well,
Because
I think
uh,
I think
don't you
there's
think?
something to be said there. Something to
Anyway,
be said
so
there.
go ahead, buddy.
So, the last time I was on in late August, this is what my sort of map, my chronology of the S&P 500 and the VIX mix looked like. S&P was ticking new highs every few days or weeks,
Yeah.
and we had a lot of green shoots on the chart representing the readings of the VIX mix. We were bullish in late August, feeling pretty good. Let's just say that things have changed a little bit since then. Um, this is where we sit today, as of yesterday's close.
Yeah.
The green shoots have largely disappeared. As we made the last set of fresh new highs, we did get a couple of green bars, but generally speaking, the volatility indicators that I gather together have suggested that people were not, fully bought into that move in the SPOOs, and have kind of been looking for this retracement that we've had. Um, so it just has the tenor of the market has changed from the perspective of volatility. You know,
Yeah.
help me, Obi-Wan. At yesterday's close, the VIX mix was at 9%. That's ugly. Um, Again, if we go back to, even last week, we were north of 50%, but we have retreated. We retreated Thursday and Friday. We've retreated further yesterday or Monday and yesterday. So we're literally sitting on pins and needles waiting to see what the earnings for NVIDIA are going to be today. Um,
Are you getting anything from like term structure or anything
I'll
backward
get there.
date? Okay,
I'm coming.
I'm still learning, Jim. I'm still learning to be patient.
Yeah, before we get there, one of the things, and I have, my followers on X and at Vixology are getting tired of seeing this chart. But I don't just look at equity markets for clues about equity markets.
Yeah,
And one of the things that has kept me on the right side of the trade historically has been paying attention to credit markets. And one of the places I watch very carefully is the high yield market, right? Because that's, the riskiest of the risk on pieces of the credit market. But, a simple measure looking at the performance of investment grade credit versus treasuries has also been a very valuable piece of information, a very valuable guide to, which side of the market you might want to be on. Obviously, corporate credit, is riskier than treasuries, and therefore, if corporate credit is outperforming treasuries, that's a sort of risk-on environment. And we saw that flip on October 31st of this
How,
year.
well, Halloween.
And it has not gotten better since then. So if you had just said, gee, that's interesting, maybe it's a little blip similar to the one we got at the end of August or first part of September. You never know whether this is a one-off that's going to repair itself quickly as that one did. But this has been going on for, several weeks now, and has been one of the things that we've been watching to suggest that this thing needs to repair itself. And if it can't repair itself, it's not a good sign for risk on trades, however you might want to structure risk on in your portfolio.
Good point.
Back to the term structure, if we look at where the VIX futures were on October 31st, on Halloween, the green lines, so we had spot VIX, around about 17 and a half, and we had a term structure that had a healthy premium and was in contango. So this would have said, hey, things are okay on 1031. That's changed a little bit since then. As of yesterday's close, VIX was up not quite to a 25 close. That kink between November and December is easily explained because the November contract goes off the board this morning.
Good.
And so, with VIX going where it did, with spot VIX rising the way it did in the last couple of days, the November contract has to chase it. The correlation between spot and the front month just gets higher and higher as we approach expiration. So, what's interesting about this for me is, notwithstanding what I refer to as the lift and separate that we've seen from Dece out to August, there's still a little bit of just a smidge of contango. So, people it's a mess, but people have not panicked at this stage. And again, I think that's tied to what happens at, whenever they cross the tape after the close today, the NVIDIA results. But it's certainly a very different picture than what we had, 2.5 weeks ago.
Yeah, yeah. The world changed.
Yeah. Another way that I look, it's kind of a shorthand, or how do you take a signal out of that VIX futures term structure? And one of the ways that I look at that is to use a couple of ETFs that represent different spots on the term structure. VIX-M, a tradable ETF, is based on the medium term VIX futures. So, months 4 to 6, where VIXI and VXX, for that matter, use the front end of the term structure. So, I had a dream one night that said, what if you compare those two and see what it tells you? And what it tells you is that, when that ratio is rising, that is bullish. And when it's not rising, when it rolls over,
Yeah.
pay attention.
Yeah.
And, this doesn't go back very far, but if you took this back farther, you'd find out that, this was a pretty useful tell at turning points in the equity market, going back as far as these two ETFs go back. The only place it didn't give you a clear heads up was the pandemic, but there weren't too many clear heads ups. Either you were nervous and got defensive, or you were surprised like everybody else.
You're
But
like
this,
Thomas Edison, man. You're like Thomas Edison. Many of his inventions came to him in dreams.
there you go.
Did you
No,
really
so,
dream
so
about this, or were you kidding?
no, no.
You did?
Although once I figured it out, it's been a recurring dream.
Okay.
Um, if you look at the far right, you can see, okay, Jim, it doesn't always work. What about that October thing?
Yeah,
Nothing always works, but
nothing.
the way I frame it is, um, it doesn't mean you can't get an interruption in your trend. But again, if you look at the bottom panel, you see that long green line. If you were short volatility from the beginning of May into October, that was a good trade.
Yeah,
Um, and having it turn red, it doesn't automatically mean you're going to stay red, but it means you better be paying attention, right?
yeah.
Measure your
Something
risk.
shifting.
Yep.
Okay.
Um, this is another look, at again, the same concept. And this is just, a simple swing trade framework, right? You take a security, you put a couple of moving averages on it, and when the moving averages cross over, that might be a trade. And, this is just using VIXI all by itself with 3 and 9 exponential moving averages and a crossover. And, gee, if you had bought VIXI every time that bottom panel turned green, you might have made a couple of bucks. Um, Again, not a
Nice.
recommendation to use this as a system, but again, if you want to eyeball some things to give you a sense of what's going on through the lens of volatility in the VIX futures, this is one way that you could kind of keep track of which side you might want to be on.
And you use it on a daily chart, on a daily
This is a
basis.
daily, yeah, this is a daily chart.
Okay.
It's, you know, you could use it on, it's fractal in the sense that,
Right.
if you wanted to amp up the speed, you could go down to a, 130-minute chart or
Yeah.
I like the ones that are divisible that give me an even number of bars during the day, so 78 or 65 or whatever. You could
Interesting.
dial it into your own time frame. And some people like simple moving averages, some people like exponential moving averages. Take your pick, find, you can find something that works for you. And but this is, to me, this is simple, and again, it's kind of a check on the weather. Um, if that thing is sloping down and the bottom panel is mostly red, then if you were brave, you could short this thing. And historically, that's worked pretty well with several punches in the
Yeah.
face along the way.
Yeah.
I'm not telling people how to trade. I'm just telling people how to get a view of what's going on.
Okay.
But at the same time, let's zoom out for a minute, because I think sometimes we get in the weeds, we get maybe too close to the trees.
Yes.
SPX weekly, doesn't look too bad. We're still up near the top of a 3 ATR Keltner channel. It hasn't really broken down definitively at this stage. That may
Where's the
change.
bottom band? Where's the bottom band come in, Jim?
The bottom band, again, this is a 3 ATR Keltner channel. I
Okay.
kind of like Keltner channels. I use Bollinger Bands and Keltner channels. I kind of like Keltner channels because they use ATRs instead of standard deviations. And if you get outside of 3 ATRs, to me, you're kind of, you know, it's the old saw, you can stay overbought for a long time, and this thing can
Yeah.
ride that channel for quite a while.
Yeah.
Um, and when you poke through the bottom channel, you're probably, hovering around some kind of bottom. Um, doesn't always have the V shape that some of the recent ones have had.
Right. Right.
But
So where's the bottom channel come in? Do you have a number on that?
hang on a second. I
Just the
can't quite,
ballpark.
yeah, I can't quite see it, but
Yeah, it's okay then.
hang on, I'll tell you.
Oh, there's a persistent. Okay.
6,000.
All right. Like it. Thank you.
So, and looking at Qs the same way, Qs have pulled back a little more. We can zoom in a little.
ATR is average trading range.
Average true
RJT.
range.
True
Average
range.
true range.
Yeah.
Yeah. Um, it basically, if you like Bollinger Bands use standard deviation calculated on close, and ATRs uh, take gaps into effect. So it's just a slightly different volatility calculation that I find useful. So there's Qs, you know, maybe
Yeah.
retracing more than spies, no surprise, given that,
Yeah.
that the big cap techs have been leading the down. And, this one's hovering, right around 525 or so in terms of
Yeah.
that lower band. Um,
Yeah.
so, that's the perspective I've got right now, Coach.
Okay, buddy.
Um, it
Good, good info.
I think, we're at a pivotal moment for these markets. Um, if you've been holding steady for a while, there's no reason to freak out. But, at the same time, given some of the things that I'm seeing, credit markets, the VIX futures,
Yeah.
um, the
Caution is
long
war
vol ETFs,
Caution is warranted.
yeah, yeah, yeah,
Okay, so you look at this whole picture, would you say that the credit market signal rollover is probably the most important thing because that's how everything can become unglued? And even the financial stocks, which were leaders to the upside during this advance from April, have taken hits and showing cracks like JPM, XLF,
yeah.
even Goldman. So, is that really the most important thing to pay attention to? What's happening in
I'm
the
I'm
credit
paying,
market?
yeah, I'm paying very close attention to the credit markets. I've got another uh, chart that I didn't include here, but I've posted a bunch of times that looks at essentially breadth data for the high yield market, advances and declines for high yield
Okay.
for public high yield bonds. Most people don't even realize that that data is published every day through FINRA. You can see which publicly traded high yield bonds, how many of them went up versus how many of them went down. So the same way you would look at market breadth for the equity market, you can look at market breadth for the high yield market. That has not um, reversed. That's been supportive since, the taper tantrum or the tariff tantrum in April. It's stuttering right now. And
Okay.
so that's the other place, so both the investment grade credit relative to treasuries and the internals of the high yield market are things I'm looking at. I've got good friends who are deep into private credit because obviously that's become a much bigger part of the landscape on fixed income. And they're watching things like, PIK bonds and deferrals and there certainly are, as Jamie Dimon says, there appear to be some cockroaches crawling out of that part of the credit market. So,
Well,
I,
UBS shut their division down a week or
yeah,
so ago.
yeah, yeah. And at the same time, there are a bunch of people getting into it. I mean,
Yeah.
Stevie Cohen says he's going to launch a private credit fund at 0.72. So,
Yeah. He's not a
what do
dumb
I
guy.
know? He's
Yeah.
not a dumb guy,
Yeah.
So,
Maybe so he could
uh,
short them all. Yeah,
There's a thought. There's a
yeah.
thought.
Jim, your work I think is outstanding for having clues of market direction, and you apply this knowledge with people's money you manage as an RIA.
Yes.
So, why don't you tell people how they could follow you, different venues?
Yeah. So I can be reached by email, jim.carroll@ballastrockpw.com. Ballast Rock Private Wealth is the firm where I am a senior wealth advisor and portfolio manager. You can follow me on X at Vixologist. And you can also subscribe to my Substack, vixology.substack.com, and you won't have to pay a thing.
Okay, we're headed towards year end, about, a little over a month to go. Um, were most of the accounts that you managed, did you keep pace with the S&P?
We run different strategies for different people, but we've made money across the board for people, and so generally
Okay.
speaking, folks are happy.
All right. All right. Okay. So, you have account minimums for managing?
Um, it is circumstantial. We like to we 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 work primarily with high net worth individuals and families. So, um,
Okay.
I would say that our minimum is really $1 million.
Okay.
Um, and we work with folks who also have a lot more than that.
Yeah.
Um,
Okay.
you know, we do a lot of work. We insist that people engage in a planning process. Um, we want to make sure we understand their needs, their objectives, their family situation, their long-term goals, and to engage in that process and do a great job. Um,
Yeah.
you know, it,
You're
it,
you're a
it,
fiduciary,
we're a
not a broker.
fiduciary, and it
Yeah.
makes more sense from our perspective, if we're working with people who are uh, serious about their investments.
Well, your content helps me, Jim. So I want to thank you for that, and thank you for coming in and teaching people about the VIX, which, I don't know, for a few years people have been saying it's broken. But, anyway, it's having a Lazarus here, so we'll see what happens. Do you think if we had, take a guess, say if we had the S&Ps trade down to, your lower band, 6,000, where do you
Mhm.
think the VIX will go to? 40, 50?
It could, Dale, and it becomes path dependent. If you remember 2022, right,
Yeah,
where we had the S&P decline, by a large number that year, but it did it kind of stair stepping.
right.
And as a result, volatility was relatively tame, relatively.
Yeah, that's true.
It's really, is there shock value in what happens in the market? Is there something that really
It's about the
deviates?
speed. It's about the
It
speed of the
it
move.
absolutely is. It's about the speed. It's about the shock value.
Yeah,
Um, well, I tell people that if you draw a line from lower left to upper right, a straight line, right, that has zero volatility. If you draw a straight line from upper left to lower right,
yeah.
that also has zero volatility. We know which one we want as a return profile, but the reality is that mathematically they both have zero volatility. So, it really is a function of, how disruptive that downturn is.
Do
And
you
the
do you have your Jim, do you have your guitar handy?
uh,
Next
I can
time.
see it from here.
All right. Anyway, so yeah, I'd like to hear a few riffs from you someday after the interview. We could wrap it with that. Because I have a guy that comes on, he does Elvis Presley. It's this is kind of a Wall Street Week, American Idol combination
I,
show.
I,
So
I I will make a note of that for next time, Dale. Maybe I can change up the lyrics on a tune that everybody knows and bring it to the market.
All right, man. Well, Jim, thanks so much, buddy. Good hunting the rest of the year. I'll see you on X, and glad our paths crossed and that you could come and teach people about an indicator that kind of gives tells if you pay attention to it. So,
There are a bunch of ways that people can and what I say to people is, look, I can't predict what's going to happen. Um, but I can try to position myself where whatever happens doesn't come as a shock, doesn't come as a big surprise. To me,
yeah,
that's an important element of what we're trying to do is just, allow people to, not panic at the wrong moments.
it's probably never been more important, Jim, in the kind of the vibes that we have in the world right now. To
Yeah,
because being surprised is becoming kind of a daily thing.
yeah,
Anyway, buddy, I
here,
appreciate,
here.
yeah, great interview. Jim Carroll, everybody, follow him at the minimum at Vixologist and learn about an indicator that is not broken, that gives you clues about market direction before the market knows. So that's a wrap, everyone. Don't just count your volatility, count your blessings, and we could stay peaceful even if the markets aren't. So you're welcome, Laura. People are thanking you, and now someone wants to sing "Stairway to Heaven" on the show, Jim. So
Well,
have a great.
that may be one of the only songs I will never perform.
Okay, everyone knows that one. Everyone, that's the song everyone wants to learn on the guitars first. But
Heard it too many times.
all right, I know what you mean, bro. So that's a
All
wrap,
right, Coach.
everyone. All right, take it easy, Jim, and everyone could join the team in 15 minutes. Get in the chat room and hang out with the people. Surround yourself with great traders, and you'll rise to their level. That's my belief, and I've seen it happen. You know why? It's happened to me. So, everyone, have a great day. See everyone tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.